Welcome back to Cover Your Assets, the interrupted version. We are coming to you in the middle of Mr. Todd Rooker's fabulous Ultimate Credit Control seminar underway right now at the Ramada near the Mall of America. We've got Todd Rooker in the house, Craig Nestor as always. The Walgraves are off this week, but we're thrilled to have along with us today Chris Tostenson of Investment Solutions, and you as well at 651-204-1700. So, Todd, we went into the break. We kind of threw a big question at Chris about what's going on with his industry. I think we really need to spend a little more time on that.
I agree with you, Kelly, because the business of investing and the potential returns and the expectations have radically changed, and the way that a person manages his money at this point is very different. And I'd love, Chris, for you to expand on that and talk about how you help a person deal with those changes.
Okay, well, a couple different ways you can look at this here. A lot of the main changes that I've seen in investment strategies and investment managements, whether it's from the client's point of view or from the financial advisor's point of view, is that the old strategies just really aren't working. You may have heard the terms, Todd. Let's do a buy and hold strategy. Over the long run, the stock market over the course of these many years have always outpaced inflation, and and you hear that same line over and over and over again. Well, take anybody in this room or ask anybody in the street, how did 2008 go for you?
Not so well.
Yeah, exactly.
I didn't open the statements for several months. I just filed them.
I can bring books and read verbatim, line for line, about how the correlation in the market, or really what we're looking for, is non-correlation of financial assets in a person's portfolio. And I'll just talk really simply between bonds and stocks. Well, when stocks go up, Kelly, what usually goes down?
Bonds.
And vice versa. Well, what we've seen in the last 5 years, and we really felt it about 3 years ago, is that there has actually been a narrowing of the correlation, and they have all been correlated, and that's just absolutely different. So anybody that's 55, 59, 62, or thereabouts, ready to retire maybe in a couple of years, and they lost 42% of their portfolio, well, it probably mostly came back now, but how did you like that roller coaster ride? And was anything done? And more importantly, did you feel that your investment advisors were doing anything about it other than hearing the old catchphrase, just hang in there and let it ride its course?
Yeah.
We have solutions and algorithms that make sense, and we like to explain those, how they work, and how they work in relation to protecting and managing your investment.
So the asset allocation models that would have insulated you from the highs and the lows, the models aren't working, and we got to look at new plans.
Yes.
Past results don't indicate future performance. Is that the disclaimer?
I've seen that somewhere with a little asterisk. So
Yes,
I guess
they're making them bigger now.
Yes, they are. So I guess the question for you, Chris, would
Yes.
be, from your perspective in how you think and strategize, but then also how you work with your clients. What is different about managing money today than it has been up until now? You said that there's an old school and a new school.
When a person buys into a mutual fund, let's just say, for example, you're buying into shares, and what you're really doing is you're really buying into the investment philosophy of that fund manager. And if that matches your goals, what the money's for, and you can weather market changes without diverting, perfect. But the reality is, each year we get older. Every few years we get a few years older. Our kids get older. Jobs may come and go. How does that even correlate with the fund manager's focus?
So in other words, when I'm in my 20s, I've got a radically different philosophy than I have when I'm in my 40s, 50s, and 60s. And why am I in the same family of mutual funds with the same diversification that I was when I started working for a company 30 years ago?
Exactly. And if you can't change it immediately or keep it in line with your goals provided from our guidance, what's the point?
What are we accomplishing?
Exactly.
Another thing that I think is obvious but worth mentioning is that in the old days, with the return on investment that everybody had those so-called expectations of, preservation of principal was something you may have touched on lightly, but it was almost a foregone conclusion that if you were, as you said, if you were diversified properly, you weren't going to lose your principal. Today, that is not the case, and today that is a major consideration. Simply preservation of principal and being able to maintain inflationary hedges against the decreasing value of your dollar as we go along.
Right. You can't diversify against market drops.
Yeah.
And that's what people are starting to realize. But there are dynamic hedging solutions, and I do explain those to clients in a way that makes sense and matters and is relevant to their portfolios.
I have a specific example. Maybe you could help me out with this one. A client, well, So mom calls me, and she says, I got good news and bad news. So I'm thinking Christmas time, maybe we, get some extra presents under the tree. I have found $30,000. Guys, true story, happens this week. I found $30,000 in that old mutual fund account. I go, that's great news. Here's the bad news. It was $45,000 4 months ago.
Oh.
So mom has these dollars that aren't doing very well. And how it lives for her is that no matter where she goes, it's going to be a paid somebody who's not going to have her best interest in mind. She doesn't really understand enough to trust the industry or know that they all talk over her. How do we help mom whose assets seem to be dwindling away just by checking the mail?
That's why finding somebody that you feel comfortable with is so crucial. One of the major issues with asset managers, investment managers, so-called financial planners, if you want to throw them all into a bunch, is that there's a real lack of trust out there. And, when you can give a strong referral to somebody like Chris Tostenson, forget about everything else. The guy you can trust, and he does a good job, and he's focused on your objectives. It's meaningful because you could lose all your money trying to figure out who the right person is to work with. And that's why I've always felt like you got to do the research on the people you refer, because otherwise they're going to undermine the very credibility you work with. Working with Chris is very important, and that's why, he's on our show.
Can you help mom?
Well, I think the first step in helping mom out is just having a conversation with her. And the first question I would point out, or really just ask her, is what is this investment for? What is
spoiling your children?
Excuse me, that is not unbiased
That wasn't
advice. That was not unbiased, Craig.
What are her goals for the money? Right?
Yeah, what is the money for? Well,
Yeah.
Is it for emergencies? Is it for Craig? Is it for the grandkids? What's the purpose of this? And then once we actually have that tackled down, we can segment it and divide it into a separate portfolio. And now we have our goals established. And my job, alongside with the client, is to make sure that with the guidance we're providing, are we within our goals? Are we in the ramifications? Because there are issues that we can't control. We can't control the noise that we hear on the news every day.
Right.
We can't control the market. We can't control the economy. We can control our values, our viewpoints, what our desired goals are. And then we're basically calculated strategies that help to reduce the possibility or the probability of an all-out failure. And it comes back to, again, what's the money for?
Well, and if she finds this money, Craig's mom, and she's like, wow, I just found 30 grand. Oops, it was 45 a little while ago. That brings me to another question that we had for you today, Chris, which is, what should people with 401ks or, Roth and other types of IRAs be thinking about and or doing right now? Because if hers was in a position to have lost that much in a period of time, what should everybody else be thinking about right now?
Well, I think the first thing to do is actually have a review with your financial advisor. And really, if you're even thinking about that or those thoughts are coming through your head, why are you working with your current financial advisor? He may be the greatest person, maybe your mother's brother's cousin, but if you don't feel you have that connection, and really what that comes down to, if you don't feel that your interests come first, then it's time to start looking.
Chris, that's a point that I make when I speak with clients. I say, the entire industry of financial planning thrives on making people feel inept. In other words, they sit there, smile and nod, and they have no clue what the financial advisor is talking about, because they're so fearful that if they ask a so-called stupid question, they'll be found out, and then that person will take advantage of them. If you ask questions and you are made to feel uncomfortable, I'll tell you what, it's time to find a new person, because that relationship is crucial, and you need to be able to ask questions and get your answers for those questions in a way that makes you feel solid in your decision making.
Yeah, I think that can't be taken lightly. This is your retirement money, and in the background that I've had in my life and the type of career that I've been involved in, there's really no difference. People have to trust what I do, but I need to know and be able to trust the client that they're telling me what I need to know in order to make these retirement accounts work for them and their goals.
It's interesting that a lot of people don't even know what they want. That's part of the problem.
That's half the battle.
It is half the battle. You see someone who inherits money, rolls a big retirement account, and you say, okay, so listen, first question is this. Do you want to grow that wealth, or do you want to use it to subsidize your lifestyle? And they'll say, well, I want to grow the wealth. Of course. Okay, that's a simple answer. And then they'll go on to tell you about how they want to be able to take lots more vacations and have a nicer car. Mm-hmm. And you go, Okay.
Kind of like I want to buy the yacht. Okay, what are you going to use to fill it up with? And
Exactly.
unrealistic.
And
but-
I think there's a lot of questions that need to really be asked, but I think you've put out some really good things to think about. What is the money for? Where is it that you're planning on going? And so if someone were going to go and choose an advisor, interview them, if you will, they should be thinking about, is this person connecting with me? Are they thinking about my big picture? What else?
Yeah, what kind of questions is the advisor asking you? Are they asking you, what is your story? I mean, you could take a typical American family. A typical American family is not going to be saying, I can earn 3% on this CD at this bank down the road here, or this investment's always returned 6.7%. Nobody... It's not about that. Here's what it's about. You have a typical American family that's getting into their retirement years. They have grandkids. They may have a grandmother living in the house. The father is worried about his job, him being let go, but he also knows he has enough in his savings retirement account. And worried about grandmother, worried about his kids, one spending too much and one going to go to school and how to pay for it. These are the kinds of issues that should be talked about and discussed.
Stability is always going to be more important than people give it credit for. And those objectives, you start with the end in mind. You say, here's what I want to accomplish. And then, Chris, your job is to try to help them plot out a plan to get where they want to go with the money they have to work with, right?
That's exactly right.
Yeah.
Chris Tostenson with Investment Solutions joining the Cover Your Assets team. Today we've got Todd Rooker, Craig Nestor. The Walgraves are off. You can join us at 651-204-1700. That's 651-204-1700. Jump online as well. Go to CYA21.com. You can also download your free copy of the Financial Crisis Bible. Fabulous piece of work, whether you're in trouble or you never want to be. This is Cover Your Assets.